introduction for people who don't know, this meetup has been going on since September 2019 every month. We try to bring exciting project and exciting team for you guys to understand what's going on in the blockchain space, not only in Thailand, but everywhere. And my name is Max. I'm the co-founder and CMO of Atato. So we are based in Bangkok, and we are a digital asset technology company. We build blockchain applications for decentralized finance company, for financial institutions. We have a custody service and digital asset platform. So we've been trying at Atato to always promote knowledge. That's why we are doing this meetup right now. And along the ways, we met some very cool projects, and one of them is actually with us tonight, and very exciting to have them here. Before I pass the mic and the floor to Brian, I would like just to say that as Atato is growing, we are looking for talented people to join us. So please check out our Facebook page, our LinkedIn page. We have some positions open for developers, for security engineers, and others. So please feel free to join us, send us our resume, and always happy to discuss with you guys. So tonight, kind of a hot topic still, a lot of questions about centralized finance and decentralized finance. And I think we have the right guy for us tonight, which is going to talk about Alkemi. So Brian Mahoney, CSO and co-founder of Alkemi, a company that we had the pleasure to work with for the past few months. So Brian, I will let you introduce yourself and the company. And after that, there will be some question and a Q&A. So please use the chat. Don't be shy to send some questions to Brian. So Brian, the floor is yours.
Thank you, Max. Can you hear me? Just confirming audio.
Yep.
Okay, great. Good, yeah. Awesome. Great to be here. Thanks for hosting me. This, I should say, it's morning my time, as you can see on my screen here. I am based in the US. USA,
Recording in progress.
I'm in a place called Minneapolis, Minnesota, which is normally I'm based in New York, but COVID shifted things around, so I'm calling in from the North Country in Minnesota. So great to meet everyone, and thanks for hosting me. So my background, just quickly, prior to joining the team, Ben and Ryan, who are fellow co-founders of Alkemi Network, I was with HSBC Bank and sort of the TradFi or the CEFI world, I guess, for several years. And I was also in early stage investing, working with lots of different startups, and fell down the crypto blockchain rabbit hole in late 2016. And jumped into this space by joining a company by the name of Alpha Point, which I have, funny enough, have their shirt on today. So what we're doing at Alkemi is quite simple, really, and from a narrative standpoint, is our goal is to unlock what we call the wall of money, or the institutional capital, TradFi, Web2. We can use there's a bunch of different synonyms and names that are used to describe it, but the goal is to bring capital on chain, and by on chain we mean bring that capital into DeFi. So how do you bring that capital into DeFi? Well, the way we think about it is we're attacking what we call, or solving what we call the three C's that have been sort of serving as blockers for institutions, fellow CEFI users and analog finance. I'll keep using different names to describe CEFI throughout the presentation. But the three C's we're attacking directly are what we call capital, control, and connectivity. So capital is just sort of self-explanatory. That these institutions want to put lots of money to work, meaning get yield on that money, get return on that money. So the platforms that they work with need to have the depth and the breadth of the ability to deploy and get that yield. Control, they need to have the we'll call it the trusted counterparty problem, but really just have an understanding of where the flow of funds are going. and a transparent and simple process along the way. And connectivity, meaning a simple way to access, flexible to their mandate, and a few other things that I'll get into in the rest of this presentation today. So in short, Alkemi Network is bridging CEFI to DeFi, and we're doing that through our on-chain suite of products. Currently, we're built on Ethereum. We have a product on mainnet called Alkemi Earn Verified, which is a permissioned borrowing and lending pool targeted towards institutions. We have about 26 million on the pool to date, and over 50 institution grade users on the platform. So this slide here just sort of talks about a little bit of the overview and who we are and what we're doing. The next slide here I'm going to is just a highlight on our product and Alkemi Earn Verified, which I mentioned. And I'll touch a little bit more on that. So what we're doing, or what we have offered on the platform, it's built on Ethereum, right? And it's using smart contracts to facilitate the borrowing and lending of these assets. Currently, we support USDC, DAI, wrapped Bitcoin, and ETH. We have a focus on stable coins going forward. So we're also exploring adding other growing stablecoin markets like a euro-backed stablecoin or a Japanese yen-backed stablecoin, these types of assets, because these are great ways. They're stable. There's no volatility or permanent loss associated with them, and everyone sort of needs a medium of exchange, especially in the wild west of crypto. So for us, it's a great use case, and these institutions, they're always looking for more sort of stable liquidity, and many of them have dipped their toe into Bitcoin too, and ETH as well. So that's also why we offer that. Go to the next slide here.
Yeah, just Brian, if I can just get you and ask you, can you, from your perspective, what's the big difference between CEFI and DeFi today, as you are coming from this one?
So DeFi, I joke, it's like when you say CEFI, DeFi, I joke, it's like U.S. politics. It's very polarized. You have the liberals on one side and the conservatives on the other side, right? And there's no sort of middle ground. But when you look at the lay of the land in terms of where the value is, right, or where the promise and value are sort of two different things. The promise is in DeFi, right? That's where the future is going. We all know that. That's why we're in this space. But there's trillions and trillions. I think the fixed income market in the U.S. alone is 40 trillion. On a global scale, it's north of 100 trillion. And then if you include the money supply, which is also around 100 trillion for fiat, that is what we call CEFI. That's off-chain capital. It's not yet moved onto a blockchain. It's operating on by governments or in existing plumbing like the SWIFT network, or what the banks in the U.S. use to operate or transfer value for their customers, especially when you think about the U.S., which is sort of that's many economies are on the dollar. So the SWIFT network is a great example of like a CEFI legacy system that facilitates interbank transfers between customers and the corporations that use them. And so when you think about or fast forward to sort of how the future is going to look, I mean, the world is increasingly more digital, right? It's increasingly becoming more interconnected. 24/7 markets make a lot of sense, and so these systems that were built in 50 years ago, or even some were built later than that. I mean, the Philadelphia Stock Exchange, the concept of that was the first stock exchange ever created. That was actually in 1792. So all that is sort of CEFI, right? It hasn't been fully digitized yet, and we're in that sort of interim stage between money 1.0 and money 2.0. And so Alkemi's goal is to provide an on-ramp into the digital world that's built on blockchains, digital capital markets, if you will, and that entire sort of ecosystem is what we call, and a lot of others call, DeFi. So thanks. Yeah, hopefully that helps.
Yeah, that does. Thank you. Thanks.
But there's a lot of things that need to happen for that CEFI on-ramp, value flow to happen, right? And also another thing is, we need CEFI capital to flow in on chain, because that's how crypto is going to sort of disrupt and really take charge and go mainstream to unlock the potential, right? I mean, the market cap of right now is around 1.5 trillion, I think, or so, give or take. And that's, that while that's tremendous, that's a tremendous market size. It's nothing when you compare it to, as I mentioned, the fixed income market in the US alone, which is 40 trillion. So we have quite a ways to go in terms of, the driving real change and adoption fully on chain, and sort of the promise that DeFi offers. So there's the things that we call it the crypto chasm. There's some things that need to happen in order for CeFi, DeFi, that bridge to happen, or to cross that chasm in between. And the way we're positioning ourselves is to address these sort of the key features on the platform. So KYC, I know it's a bit of a bad word in the DeFi world, but it's what it's doing is facilitating identity, right? And we believe that identity on chain is sort of where the world is going. You're seeing lots of other platforms pop up, like our provider, KYC Chain. They're a partner of ours. They're working on some solutions in this arena to allow for secure identity transfer fully on chain. And you could sort of there's a phrase, DeFi passport, right? So we have a platform that unlocks that and allows for trusted counterparty exchanges to happen on our platform, versus some of the other DeFi platforms. It doesn't quite meet the institutional criteria that these guys need to have that trusted counterparty problem solved for them, right? Because they have a lot of reputation on the line, there's a lot of risk, and they're deploying large amounts of capital. In addition to KYC and allow listing functionality, we also allow for institutional control. So the way we think about it is, something simple like a CSV export of your transaction history, right? Many of these platforms don't offer that functionality yet, and for good reason, because it's quite complicated pulling data from the blockchain, especially as it's reported in a linear fashion over time. But we have that functionality on our platform, and our goal is to arm our customers to make sure that they can be compliant in the jurisdictions that they offer, or that they're serving their customers or deploying capital. In addition to risk controls and reporting feature functionality, we also have a focus on it's sort of within the onboarding process, but allowing for these guys to get comfortable with who's on the other side of the trade, or the borrow, I should say, or lend. And why that's important is because they have large amounts of capital that they're looking to put into the system, and they've gone through extensive licensing processes, or just lots of people, depending on the company itself, which in some cases have 100 people or more behind it. They have to make sure that they're staying compliant in whatever jurisdiction they're operating in globally. So, solving a trusted counterparty issue is a big thing for these guys.
Yeah, I just have maybe one question on that point in particular. Yeah. For people who are not really familiar with the financial system and so on, I mean, banks and financial institutions can't really invest in DeFi today, right? Because there is no KYC, it's not regulated, right?
So some are, some aren't. It's very gray. Many of them, the ones that are not doing it directly. Okay, so they're going indirect, meaning they find some loophole in the system, and it's only a matter of time before that loophole is going to be closed by a lot of the regulators in these countries, especially the U.S. So they're doing that if they are deploying, or they have to go through multiple hurdles to deploy directly. So that there's a couple, some of the largest companies in the space, like a Galaxy Digital, for example. These types of firms are using tools in the market like a chain analysis or a cipher trace, which are companies that monitor the flow of funds on chain and look for money laundering activity, terrorist financing activity. So it's quite an intensive tool set and process that these companies offer, and a company like a Galaxy is using this to monitor the funds, and it's just it's a lot of resources, a lot of legwork required, but they're yield hungry, so that's why they're sort of taking that initial risk if they are in fact deploying. But 9 out of 10 or 8 out of 10 sort of TradFi institutions are not in the space yet. Because of these two blockers. And then the third blocker is just the complexity, right?
Yes.
Crypto moves very fast. DeFi moves even faster. And you have this sort of degree of education that is missing, right? So these guys are holding all the capital, the CEFI guys, but they're not quite sure even how to get in if they wanted to go in, right? And so they require a lot of hand holding. They're not comfortable with MetaMask, right? And for good reason. I mean, putting a couple $100 million on a MetaMask transfer is quite a. I mean, you can do it, but it's a risky move.
It's a leap of faith.
Yeah, a little bit, yeah. So there's again, these are problems that I wouldn't even describe them as problems. They're just sort of speed bumps to adoption. So our goal is to smooth the road between the two sides. And we're playing that sort of delicate balance and threading the needle. So, and I just want to comment on, because we've been talking a lot about CEFI and some of the blockers, but so Alkemi is, we very much ascribe to this new future of DeFi and where the world is going. I'm a hockey guy. I play hockey, and I like to use this phrase, skating to where the puck is going. That is exactly the approach we're taking. Meaning we have a DeFi-based ethos and governance. So we're built, our products and services are built entirely on chain. We believe in the power of community. We have, full transparency. All of our documentation and procedures are open source. So you can go online and view them, docs@alkemi.network. We're very transparent and updating. So all the sort of values that DeFi represents, we certainly ascribe to that, and further, we are going to be decentralizing. So we have a token event coming up later this summer, and we are, as part of that process, 80% of the token supply is going to be turned over to the community. So we have lots of investors, lots of community groups behind us already. And once the token is live, they will be empowered to sort of own the network, or co-own the network with the founding team at Alkemi. So our goal is to bring CEFI with us on the decentralized journey, right? So empowering both sides as we move across this spectrum of decentralization and progressive openness over time, right? And so that's kind of how we're threading the needle. Is our culture and values are DeFi driven, and the products and services that we offer are more catered towards CEFI. So we call it the institutional beachhead, if you will.
If I can ask, then Alkemi is a product for institutions and enterprises, right? Who wants to invest in the DeFi space?
Yeah, Alkemi Earn. So here, I think this is give you an overview here. So these are it's a great diagram that one of my co-founders, Ben, put together. So you can think of, we have two pools in this diagram here, okay? The two pools offer the same markets. One is permissioned or ring fenced is another word you could use. That's the verified pool on the left. That is currently, that's been live on mainnet since basically January of this year, so for 6 months. That's this pool, we have over 50 institution-grade users on it. They're borrowing and lending. We support those 4 markets there that you see on the screen, and it is focused on sort of institutional use cases. Then we have a second pool that is spinning up as part of our sort of progressive decentralization strategy, this pool is going to have the same markets, but no permissioned functionality. This will be entirely open, and will be accessible by anyone sort of outside of KYC. These two pools, Alkemi Earn Verified and Alkemi Earn Open, are part of the Alkemi Network umbrella. So you can think of sort of, we have an ecosystem, right? And we have products and services underneath. Alkemi Network is what's tied to the token, and that's the governance, features and functionality that the token has. This token will be live here sort of late summer, so in the next couple months here, and this token will have governance capability. It'll allow and empower our community and members to actively participate and co-own the network with us. The token is permissionless, so there's no permissioned functionality with it, meaning anyone can use it, anyone can adopt it and utilize it. And then the pools themselves also have a liquidity mining program associated with them. So it's a 4-year liquidity mining program. We're about 4 months into the first year here. So we have quite a long trajectory and plan ahead here for as we continue to grow. And in the future, fast forward 1, 2, 3 years from now, we see Alkemi having multiple products and services underneath the Alkemi Network umbrella, right? So Alkemi Earn Verified is our first product, then Alkemi Earn Open is the second product, and we have a few others sort of in the pipe as we go into later this year and early next year. And the goal is to continue to drive, again, institutional adoption, bring in CEFI on chain, but also cater to the rest of the DeFi ecosystem at large, and continue to grow in that fashion. That makes sense?
Yes, sure. And anyone can register on Alkemi and start earning yield, or you need to be an institution?
Yes. So maybe I'll just sort of go back up here, institution. So it's really institution grade, meaning when we say institution grade, we mean you have a sort of higher or more sort of complicated process you have to go through in order to onboard with the platform. Okay, so that's like the KYC and compliance and trusted counterparty requirements that a lot of these big trading firms or big asset managers require internally. They have lots of people that and they high bar that they have to make sure that they're approved on before they can deploy the capital. Individuals can also use the platform as well. Just depends if you are comfortable with KYC and sort of going through that onboarding process. I mean, the entire thing is automated. You can apply. Anyone can apply. It's on KYC. You just go to kyc.alkemi.network, and it's a pretty efficient onboarding process. And once you get, assuming you get approved, then you're good to go, and you can deposit or as a lender or borrow at your whenever you want and pick your asset. So
companies in Thailand can onboard.
Yep, anyone in the world. So we have customers all over. I think we're basically in every single time zone. And we have a lot of people on our platform from Asia, a lot of people from Europe, Latin America, and the Americas, US and Canada. So a good diversity mix on the platform so far. And these are some of the profiles. So we have institutional traders, which are folks at like a Galaxy Digital. Exchanges would be like my last company, Alpha Point, or maybe like a ZipMax, someone like that. A custodian is an example, is like a Fireblocks or like a Copper, some of these firms. And then individuals, it's pretty wide ranging, but we have folks that are doing crypto on nights and weekends. Maybe they're with a bank or something like that. I mean, one of my friends, he works at HSBC still, but he trades crypto and participates in crypto nights and weekends. So that's a good example of he's more sort of like an institution grade individual, but participates in crypto. and nights and weekends. So lots of individuals like that. And we also have, degens on the platform as well. So lots of, opportunities for folks to get involved.
Okay, thanks for clarifying. Yep. I gave the links to the people on the chat if you want to check out.
Okay, great. Great. Awesome. Yeah, so this is just a sort of another diagram of the network, what I was touching on earlier. So at the top, Alkemi Network, right? That's sort of this entire diagram conveys that, and then you have these types of users and ecosystem participants, and the goal is to Web 2, Web 3. That sort of description is said another way. Web 2 is analogous to CEFI. Web 3 is analogous to DEFI. It's just sort of another way to think about it. And then you earn, meaning you're looking to put your capital to work, i.e. get yield on it, and participate in the decentralized ecosystem. There's two ways to do it: the verified pool, the open pool, and then the bottom sort of section is how you can access it. So going back to the connectivity point earlier, the 3 C's, connectivity is a big focus of ours. We want to channel the money Legos that everyone talks about in DeFi, meaning multiple ways to plug in. The platform's built very modularly. So you can come in through the front end, which is, you can check it out directly at earn.alkemi.network. That's accessible by a different Web3 wallet, like a MetaMask or something like that. Then we have an API backend access point. So for the users who want to plug in programmatically, they can do that. And some hedge fund folks prefer to do that. And then the third option, which is where we're seeing a lot of interest and growth as well, is we offer sort of it's almost like a DeFi backend with a CEFI front end. So if you're like an exchange or even a custodian or someone that's just operating your business, in the Web 2 world, interacting with the blockchain tangentially, you see decentralized exchanges, or what's sort of happening in DeFi, as an emerging threat to a lot of your existing business model. And so we offer them a way to remain competitive in the market by piping into DeFi liquidity, but still sort of maintaining that customer experience, and they can continue to serve their customer base by offering diverse products and services on their platform, and powered by Alkemi's liquidity.
Okay, so just in order for people to picture, so let's say that I'm a customer of an exchange in Thailand, and certainly the exchange is going to offer an access to DeFi protocols and offer yield on stable coins, on Bitcoin and Ethereum. You will be the one in the backend which is going to facilitate this service, right? So exactly. I'm going to stay with my exchange, right?
Yep, exactly. And it's for these exchanges, or just any sort of CeFi infrastructure provider, right? The centralized exchange or a centralized custodian, right? Anyone who's sort of controlling your or takes ownership of your keys on your behalf, which a lot of people still interact with crypto, through a third party. These they might offer yields on their platform already, but those yields are being provided in many cases by other CeFi platforms. So a good example of CeFi borrowing and lending products are platforms, I should say, are like a BlockFi, a Nexo, Celsius. These types of firms are all CeFi because they are built on database infrastructure, right? Celsius has a token. That's, I would say, more of a regulatory play than anything. But from an infrastructure and ethos perspective, being built fully on chain, that is a different thing than having a platform that interacts tangentially with the blockchain on users' behalf.
So that's a very, I would say, kind of important point, right? Because we have a lot of people coming to us as we are working blockchain and saying, "Oh, I'm putting my money on BlockFi, on Celsius, Nexo, but I'm also doing it on Compound. So what's the difference?" And I think it's where the money goes in some way. So maybe we can have your.
the phrase is, I think, not your keys, not your coins.
Yeah.
So you're trusting. I mean, just Google BlockFi, Bitcoin, or I think it happened in like late Q1. They gave away a bunch of Bitcoin to users. And by the way, I'm a big fan of what BlockFi is doing and these other platforms. This is not a knock against them. I think they are, helping sort of drive this crypto adoption revolution. So it's nothing against them. It's just, you got to understand sort of what you're getting into. And sometimes these nuances are lost in the process because there's, crypto moves extremely fast. There's lots going on. It's a fire hose of information. But the key point is, does that, whatever company or protocol you're interacting with, are you comfortable? Do you trust them if they're a CEFI platform, right? And sometimes, in many cases, it's hard to know because some of their business model practices are opaque, or there's just lots of complexity and nuances there. And then the other side, you have on-chain platforms that, there's other issues and complexities with it, but at least you can be comfortable in these instances that, you control your destiny, if you will, from an asset ownership perspective. And so, our yields are the yields on our platform are driven entirely organically. So it's just through the borrowing and lending activities on the platform. And we've open sourced our interest rate models. Anyone can go in. As part of this token event, we're opening up the platform, open sourcing the platform entirely. So, we're sort of staying true to that transparent, and that's, Compound, Aave, these other DeFi platforms, that's sort of the status quo in the space. So that's a bit of a different approach than some of these CeFi based, borrowing and lending or platforms or exchanges, where it's a little more opaque on what goes on behind the scenes. In many cases, they're engaging professional traders, for example, to facilitate that yield for you on your behalf. And this is sort of like the underbelly of the markets that, maybe the mainstream doesn't quite, hear about. An example on that, of just one sort of drive that point home. So if you're familiar with what Robinhood, the Robinhood platform, right? So Robinhood has crypto offering on it in the US. I'm not sure if anyone's used Robinhood, or if you can use Robinhood outside the US, but lots of news going around them in the past, let's call it since last summer, where they're doing this thing called payment for order flow, PFOF. It's not an illegal practice, right? It actually provides great efficiency on the market. There's lots of things and lots of values that value add services that market makers bring to the market, or to these platforms, right? Because they provide, spreads and depth on the assets which you need to engage with these exchanges and different platforms. So they provide a critical service. But there maybe these, in the case of like Robinhood, they weren't entirely upfront with their customers about what they were doing with their funds and what they were doing with their data, right? And so that kind of drove this bad reaction in the market, and lots of controversy around it. It wasn't illegal, but it was opaque, right? And so the same thing's happening on these CeFi platforms.
So that's maybe why we see that CeFi platforms have a higher rates than DeFi, especially as of today, right? Of course, on DeFi is changing like every day, every block sometimes, but the rates on DeFi today for stable coins or even some tokens are quite low. We see those CeFi companies still offering very high yield on Bitcoin, Ethereum, and stable coins. It's because they are trading behind, or their loan structure is different.
Yeah, I think so. Not in all cases is DeFi yields lower. I mean, there's certainly last summer, the DeFi run up, there's lots of yield opportunities out there. They're just maybe a bit harder to find right now, but depending on which platform you're using, you can get 20, 30, 40% return on that. It might not just be entirely in the native principle that you put it in. So, i.e., you put in USDC, are you going to lock in 8% every time? And the answer is no, not necessarily. It depends on sort of which market you're in, and also if that platform has the depth and breadth of assets offered on it. Does it have a liquidity mining program? Like, because you also can bundle in that's sort of the beauty of DeFi, is you can bundle in multiple layers of yield on top of just the native principal. And that's where, that's some of the stuff that we're excited about, because it's effectively structured finance, but reimagined on the blockchain. Okay. And you can you can have infinite creativity basically with these platforms. So that's where the future is going. And a lot of people see that. That's why DeFi is getting so much hype. But CEFI still in some cases does beat out the yields of DeFi. And the reason is mainly because it's fixed rate. They're able to offer fixed rates. And further to that, they have these professional traders behind them that are providing that return, because they're taking the capital. There's this concept called rehypothecation. But basically, if you deposit funds on a platform, a centralized platform, it's not just sitting there like collecting dust. And the same thing, with a bank, right? You go to check your bank account at, HSBC, your money's not actually just like sitting there and collecting dust in some like vault, right? The bank is putting that to work. That's the core of their business. And when I say putting it to work, I mean, they're lending it out to other people. They're lending it out to other companies. They're trading it. They're doing a whole bunch of other stuff with it behind the scenes. And, that's sort of a common practice, and also is backed by the regulators in a lot of these countries, right? In the US, you have FDIC insurance, so at least you're covered.
All right.
And these CEFI platforms are doing the same stuff too. So, and that's it. But anyways, that's an important point about some of the nuances of the two sides. But DeFi is getting much more sophisticated, right? It's just a matter of time and when it'll happen, when sort of the yields and opportunities outpace CEFI.
Okay. And that's very important for people to understand, and because it's sometimes quite confusing between those platforms where you deposit your cryptos, paying some interest like BlockFi, Celsius, Nexo, and a couple others, which are not decentralized finance platform. But it's going actually to my next question. You're coming from the banking world, right? So now you are on the other side, if we can say that there is two sides, right? But what do you think is, in Thailand, for example, we have a lot of banks which are announcing that they would like to work in DeFi. There are some restrictions, but I would like to understand from you, what do you see is the restriction today for those big financial institutions to actually jump into DeFi?
I think at top of the list is education, meaning that the educating gap, right? The space moves lightning fast. These are a lot of these banks are large conglomerates that move much slower. So just getting that understanding and comfortability at the banks is no small task. I mean, they call it the enterprise sales cycle, right? In many cases, it's 10 to 12 months or longer to close a deal with a large bank. Well, and when you bake in a completely new revolutionary technology on that, that's going to be much longer than a 12-month sales cycle. So that I think is top of the list. Assuming that gets solved, which again I think is just a matter of time. It's a matter of when, not if. Then the sort of the resource, there's a connectivity technology gap, meaning do these guys have the budget and resources, talent on their team internally to engage with these platforms. And then I think the third on the list is regulatory. So it's a very fragmented landscape out there, depending on which country you're in and which jurisdiction you operate. It's very confusing. It seems like these political bodies change their narrative, almost on a monthly basis at this point. And part of it is because the space moves so fast. So that's another sort of big blocker for them. And then I think that the fourth is capital. Is there enough? Is the market big enough for these guys to sort of justify the risk, assuming they can kind of get past the first three? And is the yield there? Is the return on investment there? Right.
Okay.
So you're seeing these platforms, these these banks and things dipping their toes in. And I think, this is going to sort of continue to accelerate over the next 5 years. And, we're waiting right there and well positioned to sort of do that hand holding and provide that, that environment that they can dip their toe in from a yield and capital deployment perspective. So I think it's only a matter of time.
All right. And leading to my next questions before a couple of questions from the people. I know we've been in crypto space for quite some time, so we have seen these ups and downs of the market. But a lot of people are asking, well, do you see the crash that we are seeing those days? Is it going to stop or at least slow down the influx of capital into DeFi? And do you see it somehow in the US? Do you see big companies getting cold feet those days because of the market crash, or this is just a hiccup and people are still focused on the long-term goal?
I think it depends which news source you're reading. If you're reading the mainstream news in the U.S. or mainstream in a different country, but let's just use the U.S. because I'm here. You'd think we're in the biggest bear market of all time, and the prices certainly reflect it. But crypto OGs know that volatility is just part of the game. On the path to world domination, right? This is just an interim phase, and buy the dip. In other words, from what we see, excitement is and still at an all-time high. I mean, if I go back to 2016 till now, I mean, this is like night and day from a sentiment standpoint. So we are. I think crypto is not going anywhere. I think if you would have asked me that question in 2018, I might have answered it a little bit differently. But 3 years later, I have more conviction than ever, and I think our entire team does, and our community behind us as well. That's why we're all in it. I mean, and putting our money where our mouth is. The token, right? That's sort of we wouldn't be coming out with a token and sort of decentralizing, doing all this stuff as part of the ecosystem if we didn't truly believe that this is the way of the future, and this is just kind of how the world's going to evolve. So I think it's like a sale in the market right now, and if you're looking to continue to get a little in deeper, this is the time to do it. And especially because all the bullshit and other stuff is washing out as well, which is good for building. This is when R&D and true innovation happens, right? Because people are less distracted by market prices and other noise. Indeed.
Passing the bear market was kind of painful for a blockchain business, and happy to see that the waves are turning. But in some ways, last questions before we go. I ask it because you come from the US. I know a part of your team is here in Thailand, but in Thailand we see a lot of DeFi adoption, actually quite a lot compared to other markets in Europe or somewhere. From the Alkemi's point of view, do you see more enthusiasm in Asia or in US, or it's kind of a general trend?
I think enthusiasm is high across the world. Frankly, I mean, from the parties and stakeholders that we engage with, whether they're in the U.S., or Europe or Latin America. I mean, I think a lot of people. It doesn't really matter where you're from. If you're excited by it, you're excited by it. I think some jurisdictions make it easier to adopt and get access to these products and services. And I think Asia is at the forefront of that. There's a reason why things sort of start in the East and move to the West. The West is a little bit slower to evolve and adapt and adopt. But that said, I still think sentiment across the board is pretty high. I mean, I talk to friends in Asia in the morning, and folks here in the Western side in the evening, and the excitement is palpable on both sides. So I'm very bullish going forward, and I think we just need to get over some of these speed bumps and hurdles along the way, and I think that it'll continue to evolve here as over the next several years, frankly.
Okay.
But yeah.
All right, and I will go to a couple of questions that we have on the chat, and before maybe talking after about the Alkemi token.
Sure.
So a question from Jean-Charles first, which is, I know he's a trader. What are the rates like on your platform, and how loan default is handled? So that's
how long? What was the second part?
How loans default is handled.
Oh, default. Okay.
Yeah.
Okay. So if you're familiar with like Compound or Aave, our functionality is quite similar. So we offer, it's a money market focused on stable coins, and we offer variable rates, or I should say the protocol has variable rates across the four. So USDC, DAI, Wrapped Bitcoin, and ETH. You can get sort of up to 8%, I would say, depending on the market. Because we launched about 6 months ago, not all the markets are fully efficient yet. And what I mean by that is, if you go on our site, on our docs, there's a docs.alkemi.network. There's a rates and fees section on there. We'll share the link. But there's a full interest rate model that we've published. And some of the asset markets are not quite at the most efficient utilization rate, which is like around 80%. And that means you need to get the borrower volume up. So once it hits that, that's when the rates will stabilize and normalize a little bit. And we expect pretty good opportunities for yield across the board. But right now, there's also quite a few good rates, especially I think on Wrapped Bitcoin. And then in addition to that, we have a liquidity mining program, which allows folks to earn ALK tokens as part of their borrowing and lending activities. So you not only put your principal to work and get interest on that if you're a lender, but you can also earn ALK tokens on top of that. And I can get into that here in a sec, but that's in short, that's sort of the overview.
Sorry, I was on mute. Maybe you want to expand on the ALK token, because then it's related. So, I mean, you went through a bit about the token models, but yeah, can you go ahead?
Yep. So it is a network governance token. So we're focused on utility of the token. It's going to be spendable, accessible, earnable, meaning you can use it to vote on protocol updates and feature functionality once it's out there in the wild. So we are looking to sort of have that token genesis event. It's in the process here. I can't say exactly when it's going to occur, but sort of in the next month. So keep an eye out. The best way to keep updated on our progress is stay tuned on our channels, and Telegram and Twitter. We'll be announcing everything there. And then in terms of like how the supply and economics work. So here's the detail right here. But in essence, there's 80% of the token supply, the 200 million token supply, it's capped, is going to be turned over or sort of owned by the network and the stakeholder community. So we have some of the biggest buckets on the supply. 35% is for liquidity mining. Liquidity mining is a big focus of ours. It's a 4-year program, so it's about 8% and some change per year that we are allowing customers and users to earn ALK tokens as part of their borrowing and lending activities on the platform. That ensures the protocol health, as well as make sure that we have users that are actively engaged with Alkemi, earning the token and participating in the decisions. So liquidity mining is really big for us. And the second sort of major bucket is investors and community. So we have about 20% or just over 20% dedicated for investors and community-based groups. We have a wide variety of adopters. We have folks like Gains Network and X Network and Black Dragon. These are all like community-backed and based groups that are all around the world, sort of on one end of the spectrum, who are participating in Alkemi's community. And then we also have, a lot of our clients and customers like Ledger Prime or GSR or an Outlier Ventures that are also ALK token holders as part of that 20% or soon to be ALK token holders. And these firms are all, or these groups are all quite sophisticated in participating in the network. In addition to that, the team will have 20%. So we are all in this for the long term. We have long-term vesting cycles. We're building products and services out that serve the community, and as part of that, we have a 4 to 6 year outlook. So yeah, and it's an ERC20 token. So you can kind of see the buckets here.
All right. So if you want to check Alkemi's TGE,
this is all on our docs too.
Yeah, you can check the links that are in the chat. And there is a question which was a bit about what we talked about it before on the regulation itself from Mr. Roland. Is there any dialogue or lobbying between the blockchain and crypto industry and the lawmaker in the US? Here in Thailand, this interaction is happening successfully. We know what there is, but do you have more infos on that?
The dialogue between the U.S. regulators and Thailand regulators,
no,
the
U.S. No, the U.S. regulators and the crypto businesses like yours.
Oh yes, yeah. So there are quite a few industry groups that have been formed. A lot of countries have these. I know there's one in Switzerland. There's quite a few in the U.S. Many in Asia. So in short, yes, the industry is doing their best to continue to advocate and I would say educate on behalf of the sector with the regulatory bodies. I mean, it's a bit of I'd say it's an uphill battle in some cases, depending on which where you are location wise. But I think the countries that are more proactive from a regulatory standpoint, meaning willing to learn and are open-minded, are going to be better off in the long term. And I think you're seeing that play out here with some of these sort of safe havens for different crypto companies and all around the world. So yeah,
I think it's kind of the chicken and the egg situations, but we're seeing it here. We are seeing it here in Thailand. We are quite lucky to be here in some ways because, well, regulation is coming. But I think the point of Alkemi is for institutions to go ahead with a kind of a regulated DeFi platform.
Yeah. Yep. I mean, look, we ourselves are not regulated. That's a key point, right? But we are providing the tools and services for our users who might be regulated. They might not be, depending on where it is. But the goal is to provide sort of that gold access, the gold standard for usability, right? And so it's kind of like if we meet that bar, then everything else we're okay on, right? We can serve all customers, all users, right? But the market is quite fragmented and segmented right now because of that. There's not everyone can get into DeFi, right? And so our goal is to unlock it for all.
Okay, well, that's the mission for the next 100 million users, right?
Yes, exactly.
Yeah. And so any more questions on the chat from Brian? We have the chance to have him here early in the morning from the US, which is it's always difficult from here. I saw that actually Arthur linked the docs on the token itself and also on the Discord chat, right?
Yeah.
Just on the back, when did you launch and what was the story behind? If you can just share.
Yeah. So we officially went live like on mainnet end of last year, so Q4 in December. We put the protocol up on mainnet, and then we came into this year with aggressive. We were founded in 2018, by the way. So we've been around for a few years. We've built and been through a bear cycle previously. So if that isn't a testament to the longevity of our network and team, I don't know what it is. But we came into this year with a goal to hit get, with the platform launching 10 users at 200K each, 10 institutional users. That was sort of late January when we kicked off the liquidity mining program. And I'm happy to say that we're, on over 50 users now with over 25 million on the platform. And we've actually been capping deposits still at about 500K per user. We will be lifting that cap as part of the decentralization and moving the network. So we fully expect sort of a ramp up, continuing to grow from a liquidity standpoint. And then sort of on the genesis of how we landed on CEFI, DeFi as a, sort of the narrative and go to market beachhead. We have a team that sort of covers both sides of the spectrum. I'm sort of like the CEFI branded guy with, that's excited about the future of DeFi, and Ryan and Ben and the rest of our team is very much DeFi and participating in many of these DeFi Gen Telegram groups, which is actually how Ryan and Ben met. Funny enough, so that we banded together and we said, look, there's a big market opportunity here, and to unlock centralized finance or off-chain capital flow on chain, and no one was really addressing it. And so, given the sort of our expertise and background and network of stakeholders and partners, as you'll see here, many of them are institutional. It's sort of right time, right place, what I call product market fit. And we found that, and now we're in the process of scaling up and continuing to put fuel on the fire. So we're the traction we've seen this year has been absolutely phenomenal. And we're very humbled by it. And we're looking forward to what the next 6 months and beyond brings for the network at large.
Yeah, and congrats, partners and supporters. It's quite an impressive list of people. For people who are not in the blockchain space in some ways, this is one of the largest. They are some of the largest companies in the space. So, and please let us
Thank
know.
You. And global reach too, which is good.
Yeah,
that's part of it too. Connecting the world. Yeah,
exactly. And well, this topic is quite large, and because moving into CEFI and DeFi, I think it's something that interests people. Please check out Alkemi's network. All the links are in the chat, and I think you can find it very easily on Google as well. I think if you want to experiment kind of a DeFi process, not regulated, I will not use this word, but with a KYC, I think you should check it out. And yeah, that's about it. We wrap up the 1 hour. I hope you learned something tonight. Again, this is quite an extensive topic, so we'll be happy to please reach out if you have any questions as usual. And thanks a lot, Brian, for your time. I know you are doing those meetups all the day this week, talking about the same thing. So really appreciate.
Like a show pony these days. Yeah, it's good though.
Yeah, it's part of the work we have to do, right? To bring those new users.
Exactly.
But really appreciate, and thanks to all the Alkemi team, Ben in Thailand and all the others. Really appreciate, and thanks a lot all of you guys for joining again for this meetup. Next one will be with one of your actually backer, Consensus. It will be the end of July. We are going to talk about stablecoin, so you can check out the meetup group for the next one. So thanks a lot, Brian. I appreciate your time, and talk to you, and we see you next time then.
Thanks, everyone.
Thank you.
Thanks, Max.
Have a good evening. Thanks, Brian.